Today we have the opportunity to pick the brain of Tom Wheelwright. Now Tom is a tax strategist, very well seasoned professional, and he enjoys an awesome reputation. In fact, he has testimonials ranging from mega authors like Rich Dad Poor Dad Robert Kiyosaki. He's got testimonials for people right here at Income Store, and get this, he literally has a direct endorsement from the President of the United States. No kidding, really. And his book's a bestseller. It's sought out. A lot of smart people look for this guy, for his advice, his wisdom, and his counsel. And today, through the magic of video telephony, we get to meet up with Tom Wheelwright. So let's press some buttons around here and let's get Tom cooking. Is Tom there? Yeah. Hey, Tom. How you doing?
How you doing? Good to be here.
So where are you?
Phoenix, Arizona, actually in my home office, which is, big deal for us tax people to have home offices.
Yeah, especially this time of year. Oh my gosh. So let's jump into this, okay? Because we got some questions for you, because this is the time of year a lot of smart people are looking for smart advice and smart counsel, and rumor has it you're the guy for that.
Well, some people think so. I'm not so sure. But we'll see.
Let's get cooking. I've got some questions here. Here's the first one. So, being that we're approaching the end of the year, crazy busy time for you and some of the other people, there's emotion involved and stuff. I mean, tax preparation, decision time, and, how and where to properly and ethically and legally minimize tax liability. So jumping in, so what would be your answer to the question of, let me phrase this. So how, working with Income Store, right, might in fact benefit their tax position. Could you weigh in here?
Well, so first of all, we have to understand that the whole premise of the tax law is to create incentives to do things the government wants us to do. So what we're talking about here is the government, one of the big incentives in the US as well as around the world, frankly, is for business and to create businesses, to create research, to create new products, to create new opportunities, and to create commerce for that matter. And so, with the Income Store, basically what's going on, as I understand what you do, is this is an opportunity to really, you're creating business. Every time the Income Store sets up a new website, a new store, then basically you're starting a new business. And to me, that's what I think the U.S. economy is all about, is starting small businesses. And this is what I love, is it's practical because it's a business that effectively you run from your home. But of course, because it's a business and the U.S. government likes businesses, you get tax benefits for the business. So you can get the biggest opportunity, of course, is tax deductions for creating the software, creating the website, for creating the business. And so that's the great thing, is personal expenses no longer deductible since 2017. Business expenses fully deductible.
I got it. So you're starting a business, and all the associated deductions that we've known forever. We've enjoyed the opportunity of the deductions forever. All right, well, let me ask some more questions as long as I've got you. So when we're talking about deductions, as you're saying, and depreciation, what is the difference between deduction and depreciation?
Well, depreciation is just a kind of deduction, okay? So depreciation, another term, actually one we use with Income Store type of a business, is amortization. And what you have is if you have an asset, something that's going to last longer than a year, you don't normally get to deduct that all in the first year when you spend the money. Normally what you have to do is you have to deduct it over its life cycle, right? And intangible assets, like for example, a URL, you spend, $20,000 on a URL, that's going to be an intangible asset, right? It's not something you can touch or feel. So it's intangible, which means it's going to be deducted over 15 years. That's called amortization. Whereas like services, actually creating software, those things are deductible as an expense in the year you spend the money. So There's part of what the income store does. Part of it is services. Part of it is currently deductible, and part is the amortization, or which is similar to depreciation.
Cool. Thank you for that explanation. And as it relates to end of year, I would think that that would be significant because, we're always looking to, if I could start a business, instead of giving the money into taxes, that just happens to be my gig. That's what interests me. So being that Income Store is in the business of online websites, what are the primary sort of benefits associated with acquiring this online business from your perspective?
Well, so there's actually a number of different things. You have to look at what are you really buying when you start a business with the Income Store. In part you are buying that URL, so you do have that aspect of it that's going to be amortized. You're also, though, as I understand it, prepaying for some services that are going to be rendered in the next 12 months. Well, there's a little known rule in the tax law that says that if we prepay for services that are going to happen over the next 12 months, we get to deduct that in the year we pay for it. We don't have to wait until those services are actually rendered. Okay, so we get to deduct, even if we're prepaying for it, we get to deduct it now.
This year, before the end of the year. Right. Interesting.
Now, there's actually an important caveat here, and that is for most people, it's going to be what's called a passive deduction, which means, passive deductions can only offset passive income, which means that what you're going to have to do is you're going to have to sit down with your tax advisor, and you're going to have to determine, how do I actually turn any kind of income I have from active to passive so that it can then be offset by the passive losses that you generate through the Income Store business.
Part of that's crossing my eyes. The other part of that I'm getting. And what scares me is it's really quite logical. And logic doesn't often fit for me in this scene. So that's kind of cool. So I like that. Thank you. That's pretty cool. That gives sort of pause for, I can do this and I can take benefit properly now, kind of a thing. And that's kind of a trip. So when we talk about, I read about something called passive loss rule or something like that. Passive loss rule. Is that relevant, or am I confusing the issue?
Well, that's really what I was just talking about.
Okay, that's it.
If you have a passive, in other words, you have a business that you're not actively involved with, you're not really spending the time, somebody else is doing that for you, like the Income Store, right? Then that's a passive business, which means that any losses are passive and any income is passive. Well, the rule since 1986, the last time we had major tax reform when I was in Washington, D.C., the rule since 1986 is that passive losses can only offset passive income. The challenge that most people have is they go to their accountant and their accountant says, well, you don't have any passive income, so therefore you don't get to take these losses. What the accountant's ignoring many times is that it's not that difficult to change active income from, say, your other business to passive income. So the key is to convert your active income to passive income, because we need passive income so that it can be offset by the passive losses from the Income Store. And I hope this is being recorded, that you guys can watch this over and over again, because I know this is tough stuff, and it's just a matter of listening to it multiple times.
But it makes sense. It just makes sense. And yet, I've got to tell you, this is my 40th year in business, and no one's ever explained that to me. And it makes me optimistic and excited to now go back to where I live and talk to my accountant about it. It also makes you a little ticked off because I didn't know about that. So thank you for that. Now I'm starting to see why your bio is as big as it is. So, you're known as a consummate tax strategist, and I see some why. And so for years, I've relied, like I mentioned, solely on my general practice CPA, for his counsel. And I'm wondering, what are the specific benefits from your perspective, without you, standing on a grandstand here, but what are the benefits of a relationship with someone who specializes as a tax strategist as opposed to going to a general CPA who, I don't know, may not be as well versed in this stuff as you are?
Well, really what you have to look at is your tax advisor, are they an asset or are they an expense? If they're an expense, like most people, they go to tax preparer and they're going, I want to spend the least amount possible because this is a necessary evil to file a tax return. And so I don't want to spend a lot of money on it, right? The government makes me do this, but I don't really want to do this. If you look at your advisors, though, as whether it's tax advisor, legal advisor, financial advisor, as an asset, you're going, wow, I actually want to, if they're producing income for you, remember, your biggest single expense is probably your income tax. And so why wouldn't you spend time reducing that expense? And actually, if you could have an asset, a great tax advisor, that could help you reduce that expense on an ongoing basis.
Why wouldn't you?
That's a return on investment. And here's what's even better. It's a tax-free return on your investment because your taxes aren't deductible in the first place. So if you reduce them, it's not taxable.
Got it. So, all right. So what you're saying is, as Grandma used to say, David, you've got to speculate to accumulate. And so speculating in this council to accumulate the benefit of retaining the hard-earned dollars that it just makes good sense. I mean, it's a simple, ridiculous ROI. I mean, it's really that simple. And any business person that doesn't get that is absurd. Okay, gotcha. So let's just say this, because I want, final question. You've been extremely generous with your time, and I thank you for that. I'm wondering, is it too late, at this time of the year to benefit from, an asset that was acquired in years past, stuff that we had already acquired? Is it too late to get benefit this year?
It isn't. And here's why, because when you sit down, this is why we call it a tax strategy, right? That's a plan of action, and it's a comprehensive plan. So when you look at the entire picture, the first thing we do, for example, when we look at a new client, is we're looking at what's happened over the past, and is there anything that actually we could change in the past? Were there mistakes made that we could actually correct, or is there something now, more likely, that we can do for this year that's going to allow us to take advantage of those losses or to accelerate expenses? And that's what we're trying to do, take them now instead of later. Is there something we can do? One example might be that you might have a contract that is not clear. And if it's not clear to you, it's not clear to the IRS. Okay? So actually looking at that contract and saying, wow, could we modify this contract, okay, such that it is more clear to us and more clear to the IRS? And if we do that, all we're doing is clarifying. We're not changing the contract. We're just clarifying what the contract says. Because as we all know, there's a lot of legalese in contracts, and it would be really nice if it were just in simple English. And so that's why when you talk about your tax advisor, always your tax advisor and your legal advisor should be working together on this stuff, because the legal advisor might take care of you from protect you legally, but they're not understanding that there are tax consequences to that contract. So one of the things you could do here is look at what agreements do I have in place, and do I need to clarify what those agreements mean? And particularly with respect to income store, do I need to clarify that, oh, this is for services, this is for software, this is for URL, instead of saying, well, this is just some amount of money and we don't know what it's for. So we want to make sure we're really clear, and by being clear, we're clear not just for ourselves, but we're clear for the IRS.
And so that modification of the contract, that clarification, is common. It doesn't throw up flags. It's cool.
Well, you're not sharing it with anybody, right? This is in case you have an audit. This is to help the IRS know if you get an audit.
Okay.
It's really for two people. well, 3 counting yourself, but it's for your tax preparer, because your tax preparer, let's say your tax preparer starts looking at this in, January, February, March, right? And they're looking at this, go, I don't know, I don't know what this is for. I can't, it's not clear to me. So if we just put in a clarifying statement in there that says it's this, this, and this, then we haven't changed the contract. All we've done is said, here's what the contract is intended, and we both agree that that's what's intended.
So again, we're going to use the video telephony right now. We already have him queued up. I know he's there, so let's get started. Tom, let me start again by thanking you for coming back. So being that the clock's ticking on the calendar year, a lot more questions come up, and people are just asking, they're wondering, what's the smartest and best thing to do at the end of the year? Is there, for example, is there one most popular, best strategy that you can throw at us?
Well, certainly the most popular would be to, prepay expenses that would be deductible. So you create, instead of having the deduction next year, you have it this year. So that always you want your money earlier. You want to pay fewer taxes now and we'll worry about next year, right? So prepaying your expenses, and that includes, for example, that would even include income store where you've got some prepaid expenses where you might be able to take some deductions now, even though you're going to get benefit next year.
And so is that a function of understanding your contract? Last time you talked about understanding the components of the contract. Is that answer subject to understanding the components of the contract so that their CPA or whatever knows what to do?
Well, it's actually it's a function of two things. First is understanding the contract, but more importantly is the contract being clear, okay? Because a lot of contracts aren't clear on what is it that you're paying for. And if you're paying, and if you're not clear, then the IRS is going to say it's all an intangible asset and it's going to be amortized over 15 years. So if you're not clear, you're only going to get one 1/180th of your deduction, right? You got 1 month out of a year, you're not going to get very much. If you're clear that it's services, or you're clear that it's software, you're clear that it's something other than an intangible asset, then that makes a whole different story for your tax preparer and for the IRS.
But here's what interests, dare read between the lines, concerns me. And that is, income store is not in a position to make recommendations, to opine and give advice. So that contract that we're talking about really needs to be reviewed, wouldn't you agree, by a professional who could do that. Now the professional might need to reach out to income store. I don't know. This is way over my pay grade. I'm just trying to understand how that works out.
Well, it actually needs to be reviewed by two different people, your tax advisor and your attorney, because it's a legal contract. So you have to have an attorney involved with this. You also, though, need your tax advisor to look at it from a tax standpoint. Does this make sense? Will this get me the benefit that I'm hoping to get by starting a new business?
Well, I don't want to open up a can of worms, but it really seems to me that contract really needs to be looked at by a professional, et cetera, et cetera. And I'm not doing a commercial for you, but I do know that you have a network of CPAs that do that, and it sounds like an infomercial. But wait, there's more. But it's true that they need to understand the ramifications. But what I hear clearly is there's tremendous opportunity and hidden tax benefit that they may not know about and they may not have been taken advantage of. Is that what I'm hearing?
I don't think there's any question. It's a complex area of law. I mean, we think it's pretty simple. I'm starting a business, but it's not, because you're starting a business and you're prepaying for a lot of the services that are going to be rendered in that business. You're prepaying for some software that's going to be developed in that business. You're paying for a URL. There's actually a lot of things that you're paying for it may just be one check for you, but it's a lot of different things. And so having a tax advisor, this is frankly why we created our Wealthability Network, is that we saw that tax advisors don't always have all of the support and the information that they need. And so that's, we're like you, we want to serve more people. And the way we serve more people is to have more CPAs that people can go to. So it's very important that you sit down with your tax advisor. This is your tax advisor, okay, who understands how to read a contract like this, and sits down with your attorney, and that your accountant and your attorney are willing to talk to each other. That's a big mistake people make, is they have their attorney look at their contracts and they have their accountant look at their tax return, but they don't have them look with each other. They don't have them work together. And it's, business, as you know, business is a team sport. So we have to work together, and we can't have the accountant saying, oh, that's an attorney issue, or the attorney said, oh, that's an accounting issue. We need to have them work together and say, no, this is our issue and we're going to solve it for you.
So I'm typing in like some fine print on the bottom. It says, Income Store is not affiliated and does not make money from blah, 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 blah. This is not a commercial, etc. Because it's not. But holy mackerel, do you build a case for the importance of having this sort of a collaborative thing with you or your people or somebody like you or your people? But I just hate to see, I'm an entrepreneur. I hate seeing opportunity go in the wind, not taken. And I also, now that I'm hearing some of this, hate to see tax opportunities and deductions blowing in the wind and not taken and stuff. So some of the people asked questions. I'm looking at some notes here over there, and it says, people wanted to know about deferred income and what it means to accelerate expenses and stuff. I think you kind of talked about that. Is there anything else that you want to share about that?
Well, there's a principle we all learned when we were 4 or 5 years old, right? And that is, eat your vegetables last. Always postpone what hurts and accelerate what's good. So eat dessert first, eat vegetables last. That's kind of the idea, right?
That's not what my mom said. Nuh-uh.
No. Oh, no, your mom didn't say that,
okay.
But that's what you wanted to do. And so what we want to do is we always want to postpone the income, because that means it's taxed later, and we want to accelerate the deductions, meaning that we deduct them now. So we're trying to get the most tax benefit now, and the reason is because we can use that money that we don't pay the government to do more business. Okay, it's not that we're going to go spend it on a boat or a fancy car. Is that we need that money to actually increase the amount of business that we can do. Maybe increase the number of, if it's websites that we need to buy, if it's whatever we're doing in our business. The more money we have now, the more we can actually contribute, to society by actually building our business.
So Tom, let me ask you this. So how does all of this impact making a decision at the end of the year to do more stuff with Income Store? Does it? I mean, obviously, you don't want your decisions to be based upon, fear, uncertainty, or doubt, or whatever, but how does all of this stuff impact moving forward with Income Store assets?
Well, first rule, of course, is that you only make an investment because it's going to return you cash, right? So you're always looking at the return on investment. We never want to have the tax tail wag the dog. So we're not doing it for tax purposes. We're doing it because we believe this will produce a great return on our investment. That's the only reason to make any investment.
That's number one. Hashtag number one.
That's number 1, 2, and 3. Okay, you get down now you get down to number 4, which is, okay, how do I improve that return on my investment? And one of the best ways is to reduce your taxes, is to take the tax benefit, because we all know that if we get $1,000 after tax, that's a lot better than getting $1,000 before tax, right? It's like $1,000 versus $600. Which do you want? You want the $1,000. And so when you're looking at any kind of investment, whether it's starting a business with the Income Store, whether it's buying an oil and gas well, whether it's buying real estate, whatever it is, anytime you're looking at that, one of the factors should be, how do I structure this in such a way that I get the best tax benefit legally? Okay, how do I do it the way the government wants me to do? Well, one of the concepts that the courts have talked about for years is that, look, you as the taxpayer, you have the right to structure your deal any way you want because you're in charge of it. The IRS doesn't. They're only looking at it after the fact. But if you don't structure the deal right, the IRS gets to do whatever they want. So it's so important that you actually take the time to look at your agreements, to look at your tax situation. Let me give you another point. At the end of the year, you need to know what your tax situation is. It may be that you don't need another tax deduction. In that case, let's not be accelerating the deductions. It may be that, boy, you had a big year. And so therefore we need to get, we'd like to get the deductions now, but either way, it's just a matter of, do I do it in December or do I do it in January? I mean, those are really the questions.
Thank you. That's sage advice there. Look, because a lot of people are asking these questions and they just don't know. And they need to have trusted advisors that can give them that counsel so they can make an intelligent decision. So that they're not abdicating the responsibilities there. They're delegating and working, like you said, sort of a team sport. I high five you on that one, man. So again, thanks for your generosity, and I see why your books sell well and why you've got a ton of clients. And as a final sort of matter of interest, and I promise it's the final one, because those in our development team, they're often asked for their opinion on business formation structures, and of course they refer the questions to professionals and stuff. So would you be willing to answer that question from the perspective of just what are sort of the different tax treatments towards the different business, formulations and structures? Could you just weigh in on that?
Really, the question is, do I get a deduction when I spend the money, or do I get a deduction over the lifetime of the asset? Okay, that's really the fundamental question. And so depending on what you're spending the money on makes the difference on whether it's deductible now or deductible over a long period of time. Like I mentioned before, if we're not careful and it's not clear, so we know that there's an intangible asset in there, like a URL, we know that's an intangible asset. If we're not clear that it's not all URL, then what's the IRS going to say? They're going to say, well, it's all URL. So now instead of taking a big deduction this year, we're going to get a little deduction every year for the next 15 years. Well, what we'd like to do is we'd like to maximize our tax benefit now instead of waiting, so that we can use that to offset other income, that other passive income, and that way we get to use our tax dollars for what we want to use them for instead of sending them early to the government.
Okay, well, that makes good sense. Thanks, Tom. Thank you very much. And we're going to shut down the Zoom call, let you get back to your wild and crazy year-end tax stuff. By the way, you look pretty healthy for a guy who's going through what you're going through right now, because the end of the year is kind of bonkers for you. So before you go, and in consideration of your being so open to, to share, and if anyone's looking to engage you or anybody in your group, how do they go out? And again, this isn't a commercial, but if they do have additional questions, and we would ask that our people be judicious, certainly with your time and all, how do they reach out to you?
Just go to our website, wealthability.com, and you can schedule a consultation with us right there on the front page. And we're happy to help any way we can. It's a complex issue that we're talking about here. And so if there's a way we can help you, or if there's a way we can help your CPA, we're also happy to help your CPA. Remember, we're building a network of CPAs. So if you've got a great CPA, you go, they just don't understand this, we're happy to help them learn it.
Tom, thank you so much. Get back to work. We're going to click the Zoom thing and say goodbye to you. Peace out. God bless and love. We're going to get back to our thing and hope you do too. Peace.
Thanks, Dave.
All right, man. Holy mackerel. You talk about, high content and stuff. I hope that you are as stimulated as you possibly can to make the right moves, make the right decisions, seek the right counsel, make the best considered moves.